All right, folks, here we are on Trading Nut. We've got a familiar face in the house with Kane Fernando back in the Trading Nut seat there. Welcome back to the show, Kane. 2 years on, I believe.
Yeah, thanks for having me.
So you were 19 last time we had you on, and you showed us this amazing account flip that you got you into trading and got you away from your potential golfing career. And since then, by the looks of the sign in the background, it looks like you've gone on to great things. So today, what we're going to do, guys, is we're going to get a quick update from Kane about his journey from 19 to 21. It's not going to take too long. It's not going to be like one of the full interviews. Then he's going to jump into a price chart and walk you through a way that gold traders can approach the silver market and show you how correlated these things actually are, and even dive into some of the very small time frames to show you where some liquidity is. So, Kane, I'm going to hand things over to you to give us a quick update to start off with. Hey folks, my sponsors City Traders Imperium have just launched some amazing changes to their funded trader program you got to check out. You can now skip the whole evaluation, trade gold as well as Forex, plus they've increased the drawdown you're allowed in both the evaluation and when funded. With C2A, it's even faster and easier to reach up to $4 million in funding with a 50 to 70% profit share. Click the link in the description to find out what else has changed.
Cool. So, yeah, sort of progression from, I think it was last July. So I came on about 2 weeks before my 20th birthday, and obviously it's now 2 years on, 21. So the progression has been obviously just kind of starting a business, obviously just trading on my own, lockdown coming into effect and not really be able to travel or anything like that. So KFX was born out of lockdown because I obviously had all this knowledge and I wanted to help people with it. Everyone stuck at home and all that kind of stuff. It's gone really well, and I found out that business was for me, and I've loved coming in early into the office, creating everything myself, and just seeing kind of the baby growing up into just growing up into a teenager or something like that. So I kind of took the step into kind of making it so much more real and professional by opening up the trading floor, as you can see behind me, and creating the prop firm as well. So KFX, which was the education side of things, turned into KFX Capital, where I'm now funding traders up to $4 million US. So like that was the ultimate goal kind of 6 months ago, and now it's finally playing out as I sit here. So I think it's all about having the vision. So even if you traders out there, if you have the goal and the target and you work towards it, not within business but within trading, you just have to stick with it, persist through the hard times, the bad times, even if the up and downs of business. You have the same in trading, and it can be relayed kind of across life as well. But yeah, so now I've got some traders on the trading floor. At the moment, there's 4 of them this week, but there'll be 6 from kind of next week, and I'm funding them. So one of them is funded with FTMO, and a lot of my traders in my membership group are funded with FTMO, funding talent as well. But a lot of those kind of trading firms don't really cater for kind of my strategy, which is more kind of swing trading, day trading. And I want to make it a lot more relaxed and cater for people who may have full-time jobs and are trying to kind of make that jump and progression into trading to make it a full-time thing. Whereas I think things like FTMO, they're obviously great in their own ways, but I think they can be improved, and that's why I want to bring out my own funding. So yeah, trading floors up. And, I'm also happy about that. And obviously got the YouTube. My brother, he now works for me. He's doing kind of my videography, editor kind of type thing. So keeping it in the family. And, I got the funding, which was going to be coming out this week. So that is kind of the next kind of stage for me. And then coming into next year will be the crypto, which will be kind of the next big thing for maybe KFX Crypto. I haven't figured out the name yet, but something like that. Cool. But yeah, so that's kind of me. And the strategy has been refined as well. So I'm sure we can jump in right now and show you guys what's going on.
Definitely. Look, thanks for the update. Right, let's jump into a price chart and give you guys this insider knowledge into how you can trade silver with a bit of knowledge about gold. Hey, want to trade crypto and gold like the institutions? Well, you can, and it's free for 14 days with Sage Strategies, fully automated trading strategies. Check out their live track records for 25 unique strategies, plus they host everything for you, which is perfect for beginners to advanced traders or investors. Simply sign up for their 14-day free trial today to experience it for yourself.
Cool. So if if you guys don't trade silver, obviously the symbol is XAGUSD. So this is just the normal chart actually a chart that I marked up this week for the trades that we took within the membership group. And it's quite simple, really. The 51 EMA is such a huge and important part of the way I trade. Not many traders use it out there, and not many traders use it with the daily or the 8-hour time frame. So if we look at something similar to gold, if you look at something similar to gold, which silver is probably the closest correlation, when you see movements in the market with gold, silver will follow. So that is kind of the correlation you see between the two. But if you look at how they move, if you look at the big psychological levels, silver will bounce off psychological levels, and then maybe a few hours later or a day later, so gold will do the same. So kind of it plays out before gold will play out, and it will kind of give you that kind of cheat code almost. Okay, so sometimes obviously the cycles in the market are going to vary. So not all the time it's always going to play out perfectly. But like, let's say this time last year when I used to use this strategy, looking at gold and silver, they used to just move in correlation with each other. And sometimes, as I said, silver would happen before gold, and you can kind of, see it happening like you have a crystal ball or something. So this was a chart that I marked up this week, which I can kind of delete in a second, and then I'll take you through how I kind of got an entry on this. So if you just look at the chart right now, you can obviously see that is a 5.23% trade, and this is what it's looking like. So let's just clear this chart, remove drawings, okay? And if we break this down, okay, the first thing we're going to do is use a trend line, because that gives us the bias of the trend. If you want to look at the higher time frames, you can. But for me, I just like kind of putting on the trend line and seeing, what's going on in that particular moment. So I can see here, 1 touch here, 2 touch here. Okay, so if I go back in time, because this didn't happen last week. Okay, what happened late last week, but I gave this out. I think it was the week before. So this is what I was seeing live in the market. And then the next thing I do is I stick on my Fibonacci, which obviously is it's like the refined Fibonacci. So I don't use all the Fibonacci fib levels. I don't use the 50%. I don't use the 61.8. Just because I like having the deeper retracement, because when you look for deeper retracement, which I'll show you in a minute, you will always have a bigger R to R, because if there's a deeper retracement, your stop loss will be smaller and your R to R will be bigger, and that ultimately means you'll be more profitable in the long run. Okay, so that is placed on, and then the next thing we can kind of look for is potentially from around that 71% level. You can see that there's that 24.8 level, okay, which to the left here, there's some structure. So we pull that down a little bit, just to make it a bit neater. We can see there's some structure. So structure is basically support, or acting as resistance. So here you can see support, then act as resistance, we want to see acting as resistance. So if we pull this across, you can see this is where kind of wicks are accumulating around this area here. So when I place on a Fibonacci, I'm not always looking for a particular level to be hit. It's just kind of helping us with a zone. So these zones we can then kind of scale down onto smaller time frames to look for liquidity within the market. Okay, so that might be 15-minute time frame, hourly time frame, and things like that. So we've seen the structure, we've seen there's a trend line, we've seen the golden fib zone. The 71% level is a big level that the banks and institutions like to use. So that we also have as a confluence. We have our stop loss above the 100%, and if I put our take profit there, something like that. Okay, this is kind of what I'd be looking at for this particular trade. So it might be a little bit different to one I had before, but this is kind of the standard one that I'd go for traders, starting to use this strategy to make it a bit more simple. I go into more detail and I can refine it a little bit further if I want to, but that's for another day, and for kind of people who've been in the membership or something like that, where I can explain it a bit better. So we've got all these confluences so far. We have that 24.8 kind of level around this region, okay, just around here, and that's around the 71%. So If we then play this out slowly, put it one by one, so price has retraced into that that zone, okay? And I've also forgot to mention that we have the 51 daily EMA. So how do I know that this is any significance to me? I can see here price is basically pushed beneath it and it's come up to respect it here. Okay, it tapped it, then it sold off. It tapped it again, sold off, and it tapped it again, and it sold off. So to me, that's acting as dynamic resistance. It can't break above it, so it's acting like a ceiling, right? So basically, since the 17th or 21st, around that time, since the 21st of June, price couldn't break above this level. So now, if you fast forward to the 3rd of September, that's obviously significant to me because that's 6 weeks. That's like two months. How long was that? Over 2 months worth of price action, which is obviously being capped by this line. So that's helping us as well because also the trend line's being at that point, and basically because the pattern is telling us that it can't break above it, that's telling us that it could and is highly likely to sell off from that zone. So now price is at that point. We can play out maybe if we go on to the small time frames at the 4 hour and we place out one by one, we can see now the consolidation, which is the consolidation phase. So if we actually look at this, okay, it's come to the zone, it's come to that point of confluence, we've come to the 4 hour, you can see it rejecting, okay, shooting star doji, another one, you can see kind of another shooting star, and then now we can scale down to the 50-minute, hopefully it lets us do that, because usually it kind of goes all funny, and we can see that, I look for liquidity, so liquidity is basically the accumulation of wicks in that zone. So we've obviously put the bigger zone on and the bigger time frames, but now we can scale in. We can scale in into the liquidity point where price is being respected, where the sell orders are coming into the market, and where kind of the institutions are selling from, and where they have their kind of block sell orders, should I say? So if we play this out a little bit better, okay. Something like this. This is the area on the bigger time frames that you'd have kind of looked for your sell position. Obviously, my alert was at this point here. So if you go back onto the 4 hour real quick, you can see that this was the accumulation point, and this is the area that I'd be interested in. As I said, if you were looking for like a re-entry or you missed a late entry, you just look for price to maybe, if it could, retrace back into the zone, back into that area for a short position. So price came back in again, as you can see, okay, 1 touch here, 2 touch, 3, 4, all these candlestick rejections. That's how you find your liquidity. You find where price is being attracted to, like a magnet. You see price coming once, twice, 3 times, 4 times, this like a whole zone here. And that's where I'd have taken an entry. So I'd have taken an entry now after these rejection candlesticks. So if we go back onto, let's say, the 2 hour, I've taken an entry from that zone. So I've zoomed down. Actually, I'm going to play it out really. So I've taken an entry, and then we can just play it out. Okay, and you can see that's how, obviously price is still live in the market. It hasn't fully played out to my take profits, but you can see how if we go into the bigger time frames, how I've actually dissected the market to find that point in time and to get a sniper entry with such a precise entry, and how I've done that by zooming down within the confluence point to find the liquidity zone. And that is how I teach my members and how I teach my students how to trade, because you can basically look at the patterns in the market, look at the daily, the daily EMA as a confluence, the trend line structure, the golden fib zone, the cycle levels, and then you find liquidity points, which is the kind of key to it, and that will kind of give you the biggest R to R. So that's a 4% trade, and if that played out with my funding, 2 of those, and you'd have passed the valuation phase, and you'd be getting funded. Happy days.
Hey guys, ever wonder what broker I use? Well, I use these guys, Hanko Trade. Look, it was a no-brainer for me because I was looking for a broker with really good trading conditions and one without any leverage restrictions. Look, also, by joining Hanko Trade, I was able to cut my cost of trading significantly with their super low commission of $1 per 100K. Look, if you want to find out more, check out hankotrade.com, or there is a link in the description. And so what about the correlation with gold in this instance? Was there anything that you could see on the gold chart that gave you an advantage here?
So if we look at gold for a second, If I just clear my chart. If we look at gold, you could have potentially, if you look at we go onto the daily time frame, and then if I save this real quick onto greens, so it's here. So if we just look, for example, if we look here, if you just look at them as a kind of just as a normal pair, you can see how they're quite similar right now. So if you can see here, it's kind of pushing up here, and gold has a similar kind of movement here. It's pushing up, coming down, pushing up. And you can see here on the 6th of September, you can see the consolidation, and then you can see, or should I say around the 5th or the 6th of September, you can see the consolidation before the sell-off occurred. And if you look at silver on the same time, around that same time, but kind of, around that kind of similar time or just after, silver pushes up and then it has its consolidation and then it sells off. So the correlation's there. Obviously, I'm not going to be trading silver and gold together, but you can look at them to see, okay, gold's doing this, it's had its rejections, it's kind of looking for that sell-off, maybe off that huge resistance level to the left here, you can see. Okay, so that's obviously hasn't been broken above since the 21st of June. So that indicates to you that it's highly unlikely to break above it. And then obviously in conjunction with your silver analysis, you're looking for a short, right, with all the things that I spoke about. So if you look to gold and you see that this is a huge kind of level of resistance, as we know, they're correlated. And as you know, once you see rejection candlesticks like this, that can be used to help you with silver when you're trading silver. It's not too, I'd say it's not too hard to understand. It's literally just looking at the pairs, looking at how they're moving, looking at the significant levels. As I said, psychological level 1830, okay, which is a huge round number. And you can see that this was the area of interest. So we looked at silver, we did our analysis. We then double checked on gold, what was going on, if there were significant levels. And as you can see, they both played out to the downside in conjunction with each other after having their rejections. So it's just a little kind of trick that I use that I find to be helpful, and it's just kind of giving that extra confidence when taking trades on silver and gold, because as we know, they're so volatile and they can eat you up as a trader if you're not trading them correctly.
And how would you manage? How are you planning to manage that silver trade that you're in? So
for me, and kind of the strategy that I'm using with my members, my stop loss is obviously just above 100%. Now that it's, once it's kind of 100 pips in profit, I put my stops to break even. So now there'd be a break even, and I would be taking 50% of my position off at the 0% Fibonacci, and then if I want to be a bit more aggressive, I can let the rest play out to the kind of minus 61.8, or I'd take off another 25% at the second take profit, and then I could just finish the trade here. And kind of close it out altogether. So it's more about protection of capital to me, and accumulating over time. Because as the funding, as I trade in for my funding, that's kind of how I want to be: protection of capital, correct risk management, and that is kind of the key kind of things that will make you a successful trader.
Brilliant. Well, look, Kane, thank you very much for coming on once again and sharing that with us. Guys, do remember we did do a podcast and another video before this as well. So it was a couple of years ago, and I believe you did the replay challenge as well. So if you want to hunt around on Trading Nut, you'll find it. Probably link underneath this video somewhere. Kane, before you wrap up, what's the best way for the guys to get hold of you?
To find me on YouTube, which is KFX Capital. I've got some cool videos up on there. Or on Instagram, which is at KFX Capital. No, there's no underscores or anything. So if there's any fake accounts, it's just KFX Capital, or Kane Fernando, which is kind of just my personal account, which I also post some trading and motivational stuff as well.
Brilliant. Well, look, guys, remember, link below the video as well, and that might make it easier for you to find some of these things. And do remember, hit subscribe, hit like, and click on that notifications bell, and click all to be notified when future videos like this one go live. See you in the next one.